The local index will be contending with mostly positive global sentiments this morning, and this with sentiment boosted by some positive U.S. economic data. Makwe Masilela is Chief Investment Officer and founder at Makwe Fund Managers, joining us now to give us a sense of how the JSE is performing in early trade. Bob Masilela, good to talk to you again, having not spoken to you in a while. Give us your overview of how the markets are faring in early trade so far in this month of August. A bit of turbulence so far, you think?
Not really, Toli, but so far we see that the markets continue to build up on the momentum from yesterday. Remember, on Tuesday we closed down 0.9%, then yesterday we closed up 0.9%, reversing all the losses, but today we are up 0.4%. And as you said in your intro, it's all of that surprise increase when it comes to U.S. manufacturing numbers, non-manufacturing numbers. Remember, that is the biggest component for the U.S. as compared to manufacturing. And as well, markets continue to see that what's going to be happening with this whole U.S.-China tension. And so far, that tension doesn't seem to be too serious, but actually we all don't know whether must we call this a new bull market or probably this is a bear market rally. I think it's just a question of wait and see.
Yeah, let's talk commodities. Brent crude. The futures seem to have stabilized near the $97 a barrel as traders are weighing exactly the modest supply increase from OPEC Plus. Talk us through the developments there, and I suspect people like myself will be wanting to know whether we're going to see another fuel decrease in the near future.
It's possible if we continue at this rate. As you said, I mean, they've been down yesterday almost 4%, but it was all because we've seen that OPEC at their meeting, they only decided to increase their output by only 100,000 barrels per day, and that amounts to almost 0.1% of the global oil demand. And in any event, should they have increased their supply by more than that, currently we know that most of the OPEC members are struggling to meet the very same demand that they've been allowed to produce. So it doesn't make any sense for them to increase more. And they continue to have this issue about the lingering recession, that the demand outlook has been dimmed. But there is this possibility, because we know that Iran and the U.S., they are having indirect talks about the Iran nuclear deal. Should that be successful, that itself it will mean there will be more supply when it comes to the oil markets.
Let's talk CECIL. And they published a trading statement for the financial year which ended on the 30th of June 2022. How are their numbers looking?
Looking okay, and we've seen the share price, the knee-jerk reaction was that it went up in the open, and all because we've seen, number one, the guys were operating in a favorable macroeconomic environment with high crude oil prices, high refining margins, high chemical prices, and all because the guys have been benefiting from the current Russia-Ukraine crisis. We know what it has done to the whole energy complex, so the guys managed to benefit out of that. But yes, they had some South African challenges, hence there has been some lower production, and also the fact that they had losses when it comes to their hedging, and also they had very low chemicals sales volumes that impacted their earnings. So as a result, they expect their profits as headline earnings per share to go up by 28%, but when you look at their core headline earnings per share, they're expected to increase by 155%.
Let's conclude the conversation with multinational packaging and paper group, that's Mondi. It's released their results for the 6 months which ended on the 30th of June this year. How have they performed?
Very well. Pricing continues to be key. We have seen that they've managed to benefit from good selling prices and also the solid performance when it comes to operational issues. As a result, the guys could easily increase or expand their margins. And if you look at their underlying EBITDA, and from continuing operation, meaning you exclude Russia, because remember, the guys are in the process of selling those Russian operations. I mean, that EBITDA is up 66%, but if you include the Russians operation, it's up only 65%, and the guys so far, they've got almost 1 billion euros for expansionary project. And remember, they also managed to conclude that sale of their personal care component business for almost 615 million euros, and that will help them to be more focused. And going forward, they just managed to make their balance sheet look more decent, because net debt has decreased by 36%, revenue up 37%, interim dividends up 8%, and the return on capital employed has improved from 12.8% to 19.2%. So I guess the guys are just continuing to do well.
Makwe Masilela, thank you very much for that markets update.